Yes guys, so in today's video we are going to be continuing to backtest gold over the 2024 price action. For anybody that's new to the channel, I'm also going to be walking you through in depth the full trading plan and strategy that we're going to be testing today as well. I'm also going to be giving away for you guys a free trading plan document, which is the one that I personally use to execute all of my trades in the live market as well. So let's go through the trading strategy first of all, and then we'll jump right into around 40 minutes or so worth of back testing on gold on the 2024 price action from where we left off last time. So let's get right into it, guys. Alright guys, so as mentioned before we go through the back testing session, let's just do a quick overview of the trading plan itself and this full trading plan document which I have created. If you guys have already seen this before and you're not new to the channel, then I will put the chapters at the bottom of the screen. You can go ahead and skip to the back testing itself. But for anybody new to the channel, first of all, let's walk through this exact trading plan. And by the way, guys, this trading plan, you can find it to download completely for free in the description below as well. The thing that I personally do is I'll have this printed out in front of me every time I come to the charts so that I can have a reminder of exactly what I'm looking for and exactly all of the confluences that I need to see in order to enter a trade. But essentially what we're doing, first step of the trading plan is to identify overall market structure and direction on the daily and 4-hour charts. And we are only looking to take trades in line with this trend for the highest probability setups. Now, after we've done that, right, obviously the daily and 4-hour, they give us a more general directional bias and a more general view of where price is likely to head, but we want to drop down to the lower time frames such as the 1 hour to identify any of the more refined structure and any of the levels that we can't see on the daily and 4-hour because they're less refined, right? So on the 4-hour and 1 hour, we're also drawing on any of the refined structure and any of the previous mitigations, meaning that, so by a mitigation, I mean an area that price has previously reacted from. So for example, if you look at this image right here, you can see price created a lower low. It then comes back up, reacts from this supply, and that's where we get that push down from. I'm essentially just boxing this off, and that's what I'm referring to as a previous mitigation. It kind of just helps us to get an overall it helps us to more easily identify the trading range when we come to the next few steps and to see where price is likely heading going forward. Now, going over to step 2, this is where we're actually going to identify a point of interest from which we are going to either buy or sell depending on that overall trend direction which we identified in step 1, right? So for myself, I have a few different criteria that I need to see met in order for a valid point of interest to become valid. So essentially, what I'm looking for is an area of imbalanced supply for sells or an area of imbalanced demand in the case for buys in a bullish trend, and I need to see some liquidity resting below this area. So for example, this one right here, we can see that it was inside the current bearish leg between the high and the low. It was in a premium, and it was imbalanced, and I had some liquidity below it. So this is what I would refer to as a high probability point of interest that price is likely to react from. And as you can see in this particular case, we did get that nice reaction. Now, obviously, when price comes into these areas, we don't want to just randomly buy or sell in them. We want to see some sort of reaction and some sort of confirmation or indication that price wants to flip back bearish in this area and react from it. So what I'm simply waiting for in terms of confirmations, this is where the lower time frames come into play and when they come into the strategy. And what I'm looking for is essentially an M5 change of character. So I think this is best explained via a chart example. So if we bring up trading view, essentially what I'm looking out for is, let's imagine we have a higher time frame supply, right? I'm waiting for price in order to sell from this supply zone. On the M5 time frame, price is going to be coming up bullish, creating higher highs and higher lows. All I'm waiting for is for price to tap into this area, create a lower low, create some imbalance, and then I'm looking to short from that imbalance. And what we refer to as the change of character is when price breaks below this current higher low. And on my charts, I just label it as C just to make it a little clearer so that I don't have to write change of character every time I see this happen. In the case of a buy, is the same thing. Let's imagine we have an area of demand right here. price is going to be pulling back on the M5 time frame. This is going to look like price creating lower lows and lower highs. Once price comes into that demand, I'm waiting for price to create a higher high with some imbalance, and then I'm looking to enter after a pullback into that imbalance, and then I'm looking to take price higher from there. And that's really it. That's the third step of the trading plan. All we're essentially waiting for is for the M5 time frame to flip back in line with that higher time frame narrative. So if we're looking for sells in a downtrend, I'm waiting for the M5 time frame to flip back bearish in line with that downtrend, and then I'm looking to execute my trade on the imbalance, right? One thing I always like to emphasize to the guys inside VIP as well is that it's best to not overthink these trades. If you see your entry criteria, it's best to just set a limit and enter them. After all, we are only playing a probabilities game, meaning that if you think the trade looks like a bad trade, that might be the one in the sample of, let's say, 10 trades that actually plays out and hits TP. Whereas the ones which look good and which look perfect, obviously looking good being a subjective metric, these may be the ones which actually hit stop loss. So that is to say, how the trades look according to your own subjective perspective of the charts. The ones that look good may be the ones that hit stop loss, and the ones that look bad may be the ones to win. So don't overthink it, just execute all of the trades which appear according to the strategy, if obviously all of the confluences are present. Now, step 4, this is when we come into a few of the more nuanced details, including the stop loss and TP. So for my stop loss, I'm essentially, every time I'm executing a trade, I'm thinking to myself, where can I put the stop loss such that this would invalidate the trade? More often than not, it's going to be just above the high or the low. For example, here we can have the stop loss just above the high, and notice how I've left a little bit of room. That's because, particularly on a pair like gold, what you will often see is that the high will get swept one more time before price goes in your intended direction. So I want to have a bit of a safer stop loss, particularly on a volatile pair like gold, just to account for that scenario and account for that possibility, rather than just having it, you know, right above the area of supply or just below the area of demand, which I see a lot of people making the mistake of doing, ultimately just getting stopped out for price to go in their intended direction. So that's just what my personal preference is. This is a very sort of good way to increase your win rate, rather than just having the stop loss directly above the supply, which, you know, a lot of people try to do. Now, this is also a game changer, and this is one of the things I've really tried to emphasize inside VIP, which is that for this strategy, I'm going to mechanically target a 1 to 3 risk to reward. Why the mechanical target? Well, if you have, for example, a discretionary target, you don't really know exactly where you're going to target on every single trade, right? You could target, you know, Asia high, you could target an imbalance to the left, you could target this liquidity level, that liquidity level. You know, there's just an infinite number of targets, and what this leads to is just a lot of confusion when it comes to actually exiting the trade. And for example, one thing I used to do in the past with this discretionary TP rule is, if, for example, price had come to my first TP, let's say it was a liquidity level, and then started to pull back from that level back to my entry, I would make the trade break even though I hadn't tested a break even rule, or I would do something stupid like execute the trade early. And what I realized over time is that this wasn't necessarily due to a fear of loss, but it was more so due to that uncertainty and not knowing exactly where to exit the trade. So having this mechanical risk to reward has really been a game changer for myself, and is something I would highly recommend, and I'm a big proponent of if you haven't tried it out before. The 1 to 3 as well, this isn't just plucked out of thin air, it's based on my data, and based on the data, 1 to 3 was the optimal risk to reward with this strategy. I tried 1 to 2, 1 to 4, 1 to 5, etc. 1 to 3 came out on top as the most profitable, not making break even and not taking any partials or anything like that. So it's kind of just like this very simple and mechanical set and forget approach. And again, making break even, I personally found, even though it does, you know, you would think it would make logical sense, I found that based on, you know, several years worth of data, it actually turned out less profitable if I did make the trades break even. So hence why I don't do that. And then lastly, we have the risk management plan over here, but the only thing we really need to focus on for the sake of the backtesting is that we are going to do 1% risk per trade. Risk stays the same no matter how you feel about the trades, and also no break even or partials. Like I mentioned before, 1 to 3 risk to reward, mechanical TP rule, and then just below I have included a few more notes on some of the key processes that I implement, such as trade journaling and something called ASR as well. If you guys want to, I'm not going to touch on these in this video because that's not the point of this video. But if you guys want to read through this in your own time, so I will leave this trading plan completely for free in the description below for you guys to download. So if you want to learn more about these processes and how to actually go about improving your trading once you've learned the strategy, then I'll drop that in the description below. But that is really it for the trading plan itself. Now, obviously, this is going to become a lot clearer when we go through the chart examples in the backtesting session. So that is what we're going to do next. So if we head over to the charts now, and we'll jump right into the backtesting and some trade examples. Right, guys, so thanks for joining me here over on the chart. So going from where we left off last time, we got up to around May 2024. So we have around 7 months left to do of the year. So we'll keep going and we'll see how much we can get through in this one session. If not, I'll continue this series next time. Oh, and by the way, if you guys do want me to continue this series and if you're enjoying it so far, make sure to drop a comment below and let me know. If not, I will go through other backtesting and other pairs. So yeah, let me know if gold is one that you want me to continue on, or whether you want me to do other pairs instead. Maybe pound JPY, I was thinking. But yeah, getting right into things, what we can see, and kind of where we left off last time, right? Price was overall bullish on daily time frame, and one of the perspectives that I was looking to take was that price has kind of reacted from this area of daily demand, right? And we've seen price continue pushing up. But one thing we could also see here is that maybe this was just a 4-hour change of character for price to reverse this overall bullish trend and then maybe continue lower. You can see that overall it was trading at all-time highs. So obviously at this point in time, we don't have any reference points to the left to look at to gauge whether price wants to flip bearish or continue bullish. But one thing that we saw last time, and I think this was the last trade we executed, was sells from this area of supply, kind of seeing this whole move up as like a pullback for the potential creation of a lower high for price to put in a new low. And the kind of thing that made me see that was just how correctively price is moving up. You can just see it kind of moving up very slowly and correctively. Typically when that happens, price is going to continue down afterwards. You can also see here we have now had on our M5 time frame, once price came into this point of interest, price then flipped back bearish just here. So what we could maybe look at here, obviously this was the entry we took last time, selling from this area of supply. But what we could maybe look for now is perhaps a re-entry if price does start to retrace. The only thing here though, I'm not really seeing any clear levels of or areas of supply to sell from. So I'm just going to play this out a little bit. Does look like price is pulling back. Okay, so yeah, at the moment I wouldn't really be doing anything here. It's kind of stuck in a range. Maybe if we want to see more sells, maybe we could see price come up and take out this liquidity, which was in the current range. So this is the point of interest that I have at the moment. You can also see above this, we did have this supply zone was already mitigated, but you can just see it's a very clear supply zone above this previous high. So maybe if price were to sweep that high into the supply zone, we could maybe look for some shorts from there. As always though, and as per my trading rules that I mentioned before this, I'm always waiting for that M5 change of character. So once price comes into the point of interest, as it has just done, it's swept this high, it's swept this high. So we've had a decent amount of liquidity being taken out. So now we're looking for a change of character, right? At the moment, this is quite a hard situation to trade because the change of character is all the way down here. This is the current high or low. So this is probably, so even if it does sell off like this, it's probably not going to present an entry. So let's just see. Yeah, there we go. So we did get that sell-off, but unfortunately there wasn't a valid entry there for me. So let's keep playing price. Still looking, yeah, so looking to take price down into this low at the very least. Okay, so low has been taken, but it obviously didn't give us a pullback. If we take this off the chart, keep it in mind though, guys, that overall, if we look on daily chart, this is still overall bullish. Like this, it hasn't really broken any uptrend in structure. Overall, we're still very bullish. We have all of this momentum, parabolic bullish trend. So ideally, I would still be interested in some buys here. Maybe we can see price sort of reacting from or about to come into this area of 4-hour demand. If it comes into this 4-hour demand, now that we've had this second low taken out, we could just view price like this, that we've had. Just notice how kind of correctively this pullback is coming down. We've had price sweep this low. It's now swept this low. If we can see a reaction and obviously price flip back bullish inside the demand, I would be happy to look for some buys within this area. So let's go ahead and fast forward Asian session. So in a situation like this, right, where we've had this very bearish price action coming down, obviously I'm not going to enter on the M5 in this particular case because it's just not enough for me. I would want to at least see the 15-minute flip bullish. And at the moment, this is the current structure I would need to see broken. Yeah, so there we go. That's exactly what we got. Notice why this happens. It happens after higher time frame liquidity is swept and after price has come into that area of higher time frame demand. So if we're looking to execute here, this is the area of demand I would look at. Very simply because it's in a discount and created imbalance and we have some liquidity resting above it. Ideally, before executing a trade, we want to see price pull back and take out some previous lows beforehand. So I'm going to set my limit here. This is a valid trade now. And as before, if you guys aren't familiar with the strategy, I'm doing a mechanical 1 to 3 risk to reward TP just to kind of remove any of the discretion that is involved when choosing a potential TP. Yeah, so it doesn't look like price wants to pull back for us, so I'm going to cancel this limit now. Let's jump over to the 1-hour chart. Okay, so price has pulled back into this sort of demand and has started to react from it. Maybe we can look for another entry here. If not, the next point of interest I would look at is this demand down here at the extreme. But I would want to see another confirmation in that area because price has got quite far away from it. So let's have a look here. Right, so this is actually a valid trade. So you can see price came into this area of demand, gave us a change of character. We've got an area down here of imbalanced demand. So I'm going to set this limit and we'll see how this plays out. Stops just below that wick and then, as always, 1 to 3 TP. So let's see how this goes. If price wants to pull back for us. Obviously, this limit becomes invalid if price breaks this high first. It does look like it's pulling back at the moment now. So let's see. Okay, we're tagged in. Let's fast forward this. Okay, no. So that one ended up being a loss, which is fine. That was a perfectly valid setup. So, like I said, next point of interest for me is this demand that price has just tapped into. There we go. So let's see how it reacts to this area. Obviously waiting for another confirmation anyway. And as always on the M5 chart. Yep, there we go. So notice how this is one of the things I tried to emphasize in the last session, but if you guys missed it, it's that when gold comes into an area of supply or demand, very often when you get the real move, it will sweep the first tap of the demand or supply first. So notice how we had this initial push, comes back down, gives kind of like this false breaker structure. False breaker structure meaning it looks like it's continuing lower, but then just sweeps the lows and creates a higher high instead. So we've got our change of character. We've got an area of imbalance. So I'm going to set my limit here. And obviously, again, mechanically target a 1 to 3. And I didn't really explain this entry. The entry in this particular case comes from just entering on this whole imbalance. One of the things that I don't like to do is, for example, over refine the entry and enter from this very small supply zone. I would rather just get this more generic entry on the whole imbalance rather than missing out on the trade entirely. So let's see if this pulls back for us. Hopefully we can get tagged in. Okay, no. So in the end, did run. that would have been quite annoying. It ran like 2.6%, but then came back down and has now stopped us out. So my next idea, I'm still kind of viewing price from this bullish perspective. It's still within this demand zone. So what I would be looking at here is we've kind of had a sweep of this higher time frame low. If price can start to shift back bullish from here, I would be happy to look for another buying opportunity. So let's see how it develops. Obviously there's nothing yet. In this particular case, the change of character would be this high up here. So let's just see how price develops from here. Okay, cool. So we've had our change of character. We've got an area of imbalanced demand. By the way, the reason why I'm on the hourly chart in this case is because the hourly structure and the M5 structure is exactly the same. So if you look at the M5, this was the new low and this was the lower high. So it's a little bit more confusing in a case like this, but hourly time frame looks a lot cleaner than the M5, obviously. And in this particular case, the structure aligns. So this is a valid trade. We've got this area of demand down here. I'm going to set my limit on this area. And we'll see how this goes. Hopefully we can have an end to this 2-trade loss streak. Right, there we go. So we're tagged in. If you wanted to get a confirmation from this area, you could also wait for obviously your M5 entry. In this case, it would be if price breaks this lower high. Let me just play this on higher time frame so it's a bit quicker. Right, there we go. So price is pushing up. And there we go. So 2-trade loss streak, but that 1 trade puts us into profit for the session. And obviously now as well, price is obviously, it has flipped back bullish very, very clearly. We've got all of this momentum coming back in. And looking to the left as well, there's not really a lot for price to react from. Actually, maybe it is in this daily supply zone. So maybe we can think about getting it's not really a counter trend sell, because like I said before, one perspective you can take here is that this was a change of character. So this could easily just be a pullback, sweeping some previous liquidity into the supply zone. If we're looking for more buys, maybe we could at least see price come back down towards this area of demand. That would be my next buy-in point of interest. But yeah, because price is in this daily supply, let's have a look and see if it does flip back bearish. Yeah, my bad. This should have been the entry. So we've had obviously this change of character. We've had price tap into this supply. This should have been the entry. I should already be in this trade. I'm going to set my limit here just in case price does retest it. Stops above the high, and we will go for that 1 to 3 TP. So let's see if it does tag us back in. Right, yeah, there we go. So we are tagged back into this trade now. So far, a nice reaction. Let's see if it continues. Yeah, nice one, guys. So there we go. So nice sells from that daily supply. Obviously, in this case, because it was very bullish, the M5 change of character wouldn't have been enough for me, hence why I waited for this M15 one. So yeah, now price has come back down into our bullish point of interest. And the reason why I'm still considering buys from here is because, like I said, I'm kind of keeping an open mind. It could be bearish. This could be a change of character for sells, or it could just be that this is a retracement for higher prices. So I'm kind of keeping both of those scenarios in mind, and then just kind of letting price show me where it wants to go, reacting to price rather than predicting, which is one thing I always like to emphasize inside VIP, which is react, don't predict. So wait for price to show you what it wants to do. In this case, it's come into this demand, flipped bullish, created an area of imbalanced demand. Again, I played this slightly too quickly. We should already be in this trade. If price retests this area, I'm happy to get in. So let's do that. Let's set the limit. Like I said though, we should already be in this trade. I just played price slightly too quickly. Yep, so that one would have been a loss anyway. It is still within the demand zone, so if it does present another entry here, I'm happy to re-enter. So currently I would need to see it break above this structure, which is the current lower high, and close above it, by the way. I always need to see a closure above rather than just a wick above. So we have had that, but this is the Asian session, so let's jump to the next session. Cool, so Asia has pushed up. M5 has given a change of character and has created this area of imbalanced demand, which is clearer to see on the M15. So yeah, based on this, I'm just going to set a limit on this area. Stop slightly below in case price wants to take Asia low. And once again, going for a 1 to 3. So yeah, explanation behind this entry. We've obviously had sweep of that first tap of the demand, change of character, imbalanced demand, below some liquidity. So this is a valid entry. I'm gonna set this. Okay, so we're tagged in. Nice, so that was a fairly quick trade as well. TP hit on that one for 3%. And as you guys can see, we've now had this next breaker structure. So what I'm looking for now is just another pullback. Overall looking to buy price to at least this previous high. You can see that clear area of liquidity that price is targeting, which is this previous high. Next point of interest, maybe if price can retrace into this hourly demand right here. Okay, so we had a wick into it. Yeah, so obviously the point of interest played out nicely, but there wasn't a confirmation here. You can see price just tapped and went. Yeah, same thing there. Okay, cool. So price is moving over to the upside. Let's just let it develop a little bit more first. Oh, so I was about to say this was my next point of interest, but price has now also taken out the main high, which was this one right here. So obviously once that external high, so this main high is taken, kind of confirms the bullish continuations, but after that happens, you are kind of anticipating a bigger retracement now that that external liquidity has been taken out. So yeah, I'm not really seeing much here, so I'm just going to let price develop. Actually, no, this looks pretty good. So we've had price come down, take out some of these previous lows, including Asia low. Asia low was taken out. And then in terms of entries, again, this is one of those scenarios where there's not really a valid change of character here. So yeah, there you go. So price just continued straight up. Obviously, there's not really much you can do in a scenario like that. It just continues up without you. So yeah, let's keep playing price to see if a new point of interest forms. Okay, so we're getting that pullback during Asia session. Cool, so this looks pretty clean actually. We've got this area of demand on hourly time frame. We've obviously had price kind of consolidate above it, so building liquidity. So if we can, yeah, there we go. So if we can see a pullback into this area, we've also seen price take out all of these lows. So I'm going to monitor for an M5 entry here. Let's have a look. Yeah, there we go. So I'm liking the look of this. Notice how it grabbed these equal lows, gave us a change of character. And in terms of entries, like I said before, looking for a more generic entry. I think a lot of the issues people face with this style of trading come from the fact that they try to over refine the entries. And for example, a lot of people would look to enter on this demand here, for example. In my opinion, it's best just to get that more generic entry. In this case, actually, you can see we do have this M15 demand, which swept lows to the left. So I'm going to enter on that instead. We'll go for a 1 to 3. And let's set this limit. Cool. We also had price create a nice area of liquidity above this area. So that looks pretty good. Cool. So we're tagged in. Nice. Areas holding so far during the Asian session. Nice one. There we go. Obviously as well, if you weren't using the 1 to 3 mechanical rule, you could have just targeted previous highs. But like I said, it's better just to have that mechanical approach from my data that I've collected. So we've had another breaker structure now. So we're looking for more continuations. Let's just mark this on. And let me just zoom out because we are approaching the all-time high. So we've got obviously this high and this high, which are 2 key liquidity points. That price, you know, I wouldn't look to sell from these areas because price is still very bullish, but they are areas to be aware of and mindful of because price could definitely react from them because they are higher time frame liquidity points. Yeah, notice exactly where price starts to retrace from here. So looking for more buys, not really seeing a point of interest at the moment. So let's just see how this develops. And yeah, like I said, when price is very bullish like this, even though you did have a small reaction from the liquidity, it's best just to see it as a retracement and look for continuations instead. Fast forward Asia session again. Cool. So obviously very parabolic rally, not interested in any sells. Next point of interest, we have this demand. Let's see if price can retrace into it. There we go. So it didn't respect this first one. In this case, there's no M5 structure for it to break anyway, so I'm just going to play price on a little bit. Next point of interest, we have this demand down here. Okay, so we also have this one actually. You can see that's where price has just stopped. This area of demand, Asia low taken out into it. Obviously still very bullish as well. So let's see if we can get a confirmation on this. This isn't quite valid because it hasn't closed above. Right, there we go. So price has now closed above. It's given us a change of character right here. In this particular case though, there's no imbalance, so I'm not going to enter this unless price continues to push and create a new area. Okay, so it looks like it's probably gone without us. Maybe this area, if we can see a pullback into it. Why am I entering on this area? Because we've had this push up. Price has created some liquidity above the area. And if you're trading like a traditional SMC approach, you know, you would probably have assumed that you've just missed this trade, right? With being this initial entry. But one thing I like to do is kind of just adapt to what price shows you. So logically, we can have an entry here, target a 1 to 3, because we know that if price comes below this area of demand, it's very likely just going to come back for the lows. So we don't want to be in the trade in that case. So I'm happy to set this limit and just see how this trade goes. So yeah, let's see if we get tagged in here. Okay, so we are tagged in. Not really liking how the momentum is at the moment though. Yeah, there we go. So price ended up stopping us out on that one. That's fine. It was a valid trade. Let's fast forward the Asian session. Okay, so if I just zoom back out, what can we see? We've had quite a corrective looking pullback here. Price has broken the main high if we just mark that on. So essentially all of this structure here becomes internal. So it's not really relevant anymore. So if we just get rid of all of this, right? So now, you know, it has taken out this main high. So this is when you kind of start to anticipate a deeper retracement, maybe back down to one of these daily demand zones. So yeah, let's have a look here. Let's just monitor. At the moment, like I said, it's still overall bullish, so I wouldn't really be looking for sells. It's taken out this low right here, and we've seen it push up. It's still holding that area of demand we had to the left. Let's see. I'm not really liking how this is moving up quite correctively. Yeah, so now it's also taken the opposing liquidity at the Asian high. Yeah, so it's kind of in a range. I'm just going to let this play out. Not really interested in trying to trade these conditions. Yeah, there we go. So price is continuing lower. Zooming out, where is our next point of interest? Okay, so at the moment we have, going on daily time frame, we have maybe some of these previous lows. We have this one right here, and we also have this one right here. But in a situation like this, right, even though price is overall bullish, we know that there is a high likelihood that I would at least continue down into these lows. So what I'm going to look for here is actually a sell down into those lows. If price can start to pull back. Okay, so that low has been taken out, but notice how price didn't really react from it. My next point of interest for the sells would be this area of supply. Okay, no, so price never pulled back into it for us. Our second liquidity level has now been taken out. So maybe we could see some buys come back in from here. You can see as well, this was like a daily demand. If it doesn't respect this one, we also have this lower daily demand zone as well. Overall price is still bullish as well. It's still holding this daily range. So this daily bullish leg. So yeah, let's see if it does start to flip back bullish from here. It's kind of reacting from this area of demand as well. So yeah, if we can see a shift here, at least on the M15 in this case, I'll enter buys. We'll fast forward the Asian session. Yeah, so that's what I was looking for. You can see we've had a sweep of higher time frame liquidity. Asian session gave us that change of character. We've got an area of imbalanced demand. So this is a valid trade. I'm going to set this limit like so, and we'll target a 1 to 3 again. Nice, let's see how this plays out. Right, we're tagged into that. Let's play it on higher time frame. Even though it did come down quite bearish, right, you would at least expect it to maybe target some of these highs above. It's looking good so far. Don't like how it's reacted from this supply. But like I said in the introduction, it's just set and forget approach. I don't make my trades break even. Yeah, there we go. So it ended up being a loss. Quite unfortunate. It went 2.8% in our favor. So yeah, that was slightly annoying, but on to the next trade. And again, it's back to being in this quite messy range. One perspective you could take is that this was just a sweep for some higher prices. If we look internally, it did shift bullish just here, but again, it's back to being in a range. We've had a sweep of the low again. Maybe we could see some buys from here. Yeah, so to be honest, it's kind of in this range again. I'm not that interested in trying to trade this. Actually, yeah, maybe here. We've had a very obvious change of character now, as you guys can see. Came down one more time. We had this very impulsive change of character, and price has now left this area of imbalanced demand. So I'm going to set my limit on this, and we'll see how this goes. If it's a loss, it's a loss. I'm happy to take this because it's a valid trade. So yeah, let's see how this goes. Still valid at the moment, just seeing this as liquidity. Okay, nope, so price got away from us. Not really interested in trying to set a limit there anymore. If it does come back into this level though, I would still consider this a valid point of interest. Notice as well how it hasn't grabbed any of these highs. So we could definitely see a move up into those highs. Let's see if this presents another confirmation though. Obviously I don't want to just buy from this level straight away. Cool, let's see. Current change of character would be if it breaks this high. You can see as well it reacted from this extreme. Yep, there we go. So price gave us a change of character there. Again, I'm on the M15 here just because it's a bit clearer. Cool, so we have this area of imbalanced demand down here. I'm going to set my limit on this area. This is a valid trade. And we'll go for a 1 to 3 again. So yeah, let's see. Let's see if this area holds. Yeah, nice one. So area held. What I'm now expecting is just for a move up into these previous highs. So maybe we can see another entry here. Okay, nope. So at the moment, price is just continuing to push. We've had another breaker structure though. So this could be the, like I said before, this could just be the higher low on the daily chart that puts in a new high. So I'm back to being overall bullish now, and I'm looking for more buys up. Next point of interest for me is this area of demand down here. You can just see very clear level that created volume. Right, there we go. So price has tapped into it. If we jump over to the M5, can we get an entry here? Yep, there we go. So that's our change of character. We've got an area of imbalanced demand. Notice as well, this is one of the things that I always emphasize inside VIP, which is that the trade becomes higher probability whenever you see a change of character after the area of supply that you're looking at or the area of demand that you're looking at is swept rather than it holding. So one thing I've noticed, and I went through this in one of my previous videos, is that typically, right, SMC traders or people trading this style look for price to come into the demand, then give a change of character. That's exactly what we get here, right? Price reacts from the demand, we then get our change of character, but because lots of people are trying to enter here, price comes back down one more time, takes out the demand zone, and then gives you the change of character. And when this happens, and whenever you see this area of demand created, which swept previous lows, what I've personally found is that it is much more likely to hold than, for example, if price had just reacted from the demand itself. So let's set the limit here, target a 1 to 3 again, and let's have a look. Cool, so we're tagged in. And there we go. Like I said, these areas that sweep liquidity are much more likely to hold, and that is exactly what happened there. So yeah, let's have a look. Price has obviously broken structure again now. I want to be a bit mindful because it has come into this area of 4-hour supply as well. Typically when you see gold do that, it will come back down, grab some previous higher time frame lows. Not really interested in trying to sell though, so I'm just going to monitor price here. yeah, there you go. You can see very clear momentum coming in. Again, like I said, it happened after the supply was swept rather than the supply holding. Price gives this initial reaction from supply, takes it out, then shifts bearish. Yeah, cool. I was gonna say we could look for some sells, but price never really pulled back for us. So zooming back out, next area we could see price come into if we just get rid of some of these markings is, again, remember that we had this daily demand zone marked on and price is just about to sweep the demand low. So if we see it sweep this demand low and then start to shift bullish, that again would be one of those high probability scenarios where we could see the buys come back in. We also have this sort of demand zone resting below it as well. Cool, so this would be my last point of interest. Price has now swept that demand just below. Let's see how it behaves here. At the moment it is currently reacting. Hasn't yet shifted bullish though. Yeah, so on M15, currently I would want to see price break this high before we consider any buys. Cool, there we go. So price has given us that shift back bullish from that area of daily demand after it was swept, like we said. In terms of points of interest now, we have this area of demand that price has just grabbed some previous lows into. So let's see, I would want another confirmation in this area, but if we can get one, that would be nice. So it hasn't closed above this area yet. If we can see it close above, I'm going to enter the trade. Okay, no, so that's why we wait for a closure above as well, because if it only wicks above, it could just be a sweep for lower prices. It is still reacting from this area of demand here and has taken out all of these lows. If not from this level, we then have this area, which has an area of demand just below it. This would be my next point of interest. Yeah, there we go. So price came to that lower one. Let's have a look how it reacts here and whether we get a confirmation. Currently, the structure that we need to see broken is all the way up here, unless it regrabs the low one more time. Okay, cool. So second scenario played out. We've got an area of imbalanced demand down here. Seeing this first one as like a liquidity. If we look on the hourly, I'm actually going to enter slightly lower down on this one. So yeah, if price retests into this, this is now a valid entry. So I'm going to set my limit here and we will see how this plays out. If it pulls back before sweeping this high, if it doesn't, then this limit order is invalid. There we go, we're tagged in. We had some nice inducement created above it as well. Let's see, can it keep pushing? Yes, there we go. So 3% hit. And I think this is a good place to end the session. So if we look at some of the analytics so far, if I just find the correct session, it was this one, there we go. So currently we are at 68% win rate, 68% win rate with a 1 to 3 risk to reward, slightly less because I think it considers commissions and things like that. Max loss streak we had was 2, which was at the start of this session that we did today. But yeah, overall, very profitable so far, as you guys can see. We will continue this session next time. We got up to around 20th of June, so we still have around 5 months left to do. So yeah, guys, let me know if you did enjoy this video. Make sure to give it a like and subscribe to the channel if you did. And if you missed the previous part, watch this video next where we go through another hour or so worth of backtesting between around March and April 2024. So I hope you all enjoyed this video, and I will see you guys in the next one.